Most altcoins spent the last 2 years bleeding. TRON didn't. While everything else was making lower lows, TRX was quietly grinding higher, week after week, month after month. From around 3 cents in 2023, all the way to 38 cents earlier this year. That's a real move. But now look at the daily chart. The grind has stopped. Price has been stuck between 30 cents and 38 cents for months. Going nowhere, just chopping. And that raises one question. Is this just a pause before the next leg up? Or is the rally finally running out of steam? This is not financial advice. Do your own research and never risk more than you can afford to lose. Let me give you some context first. Because TRX is a different kind of asset than most altcoins. It's not trying to be the next DeFi platform or the next AI coin. TRON's entire value proposition is one thing: stablecoin settlement. Specifically, Tether, USDT. Right now, TRON hosts close to $88 billion in USDT supply, more than any other blockchain. And in the first 5 days of August alone, the network generated $37.78 million in protocol revenue. That's roughly 7 to 8 million per day, consistently. Total transactions just crossed 15 billion, 397 million accounts on the network, growing by around 0.05% every day. These are not the numbers of a dying project. So why is the price stuck? Here's the honest answer. TRX touched 37 to 38 cents earlier this year, and it couldn't hold it. That zone has now become a ceiling. Every time price approaches it, sellers show up. And on the downside, 30 to 31 cents is the floor. Price has tested this level multiple times and held each time. So, what you have is a compression. Upper boundary, 37 cents. Lower boundary, 30 cents. Something has to give. Now, zoom out to the weekly. This is where TRX's story gets interesting. From 2023 to early 2025, TRX made one of the most consistent uptrends in crypto. No major crashes, no violent dumps, just steady higher highs and higher lows. That kind of structure doesn't break easily. But zoom in to the last 6 months, and the structure has clearly changed. The grind stopped. The weekly candles are getting smaller. Volume has dried up. That's a sign of exhaustion, not necessarily reversal. But the momentum that drove TRX from 3 cents to 38 cents is clearly not the same momentum it has today. There is one near-term catalyst worth mentioning. On August 16th, TRON completed a mandatory network upgrade called Pyrrho, version 4.8.2. The upgrade brings TRON closer to Ethereum standards, adds native P256 signature verification, which is the cryptographic foundation for passkey wallets, and improves the developer experience significantly. In plain terms, it makes building on TRON easier to build, potentially more apps, more activity, more fees, more demand for TRX. That's the bull case for the upgrade. But I'll be direct, this kind of technical upgrade rarely moves price in the short term. It's a foundation play, not a catalyst. Bull case, TRX holds the 30 to 31 cent support zone. The broader altcoin market heats up after Bitcoin's move. A daily close above 33 to 35 cents with real volume confirms the next leg up. In that scenario, 37 to 38 cents gets retested. A breakout above there opens 45 cents as the next major target. Bear case, this consolidation isn't a pause, it's distribution. Smart money accumulated between 20 cents and 30 cents over the last 2 years. Now it's slowly rotating out near the highs. If TRX loses 30 cents on a weekly close, the long-term rising structure gets seriously questioned. 29 cents, then 27. The whole multi-year trend starts to look different. Here's the thing that I keep coming back to. TRX has one of the best fundamental stories in crypto. Real revenue, real users, real stablecoin volume. But the token price barely reflects that. In 2025, TRON surpassed Ethereum in USDT daily volume. The token closed the year near 28 cents. That disconnect between network activity and price is either a massive opportunity or a sign that the market already knows something. TRX behaves less like a speculative altcoin and more like infrastructure. Steady, slow, low volatility. That's fine for some investors. But if you're looking for a 50% move in a month, this probably isn't the chart for that right now. So, where does TRX go from here? If support holds and volume comes back, 37 cents is the first real test. Above that, 45 cents is possible this year. If support breaks, 28 to 30 cents is the next zone. Most analyst models keep TRX in the 30 to 37 cent range through the rest of 2026. Low volatility, steady accumulation, nothing dramatic. The more interesting scenario is 2027, if stablecoin settlement volume keeps growing and TRX burns and staking demand compound. Low 40-cent range becomes realistic. So, is the rally over? Honestly, I don't think so. The fundamentals are too strong for a complete collapse. But the easy money from the multi-year grind, that part might be done. What comes next is probably a slower, more selective move. Not a crash, not a new parabolic run. Something in between. The level to watch is 30 cents. That's the line. Holds, and TRX stays in play. Loses it, and the conversation changes completely. What do you think? Is TRX still worth holding through this consolidation? Or is the best part of this trade already behind us? Drop it in the comments. If you want more analysis videos, don't forget to subscribe and turn on notifications. Not financial advice. Do your own research. Never invest more than you can afford to lose. See you next one.